In this video, I'm going to show you how to correctly declare your investment income from ETFs and other managed funds in your tax return using your own MyGov account linked to the ATO. So when you go to your tax return on MyGov, make sure you select Managed Trust Distributions like this here. Click Next to go to the main screen where you need to enter your income. Okay, now click on the Managed Fund Distributions section of income, and on the next screen, press Add. For each fund's tax statement, you will need to add a new worksheet inside your tax return on MyGov by clicking Add after you have completed and saved uploading the data for each one. In my case, I will add one for VAS, and I will type the name here at the top, which is for my reference. I personally invest with Vanguard ETFs, and I typically receive my tax statement in the first week of August each year. However, the pre-fill in my return for this investment is still blank, and I know it won't be updated until September based on my past experience. Normally, I recommend that you wait for the ATO to automatically pre-fill your tax return to make life easier. But the pre-fill data for ETFs takes too long, and I'm sure you want to get your tax refund earlier than this. Even if you do wait, the pre-fill data may also be incomplete for your investment and your circumstances, especially for capital gains tax. For most large ETFs, you should receive a link to your tax statement by email for each ETF you have invested in sometime around early August. Hopefully. The tax statement for ETFs is the key document that you need to complete your tax return, and once you have received this for each investment, you have everything you need to declare this type of income correctly in your tax return. No need to wait for the pre-fill. Your ETF tax statement will look similar to this for each investment in an Australian listed ETF. The reason I know your statement will look like this is it must be prepared using a standard layout and set of rules. So all investments by all managers, whether it's Vanguard or BetaShares or someone else, should have a similar looking annual tax statement. I know it looks complicated at first glance, but trust me, I'll show you an easy way to read it. I'll then show you how I completed my tax return with an example in MyGov coming right up. You see this column here under Part A of the tax statement under the heading Tax Return Label? Well, this is the label that tells you which box you should be putting each number in your tax return. Now, I just need to start adding the values on the tax statement into my tax return using the box number here as a guide. Now, I just need to start adding values on the tax statement into my tax return using the box numbers here as my guide. So the first item on this tax statement is 3606 that has box 13U next to it, and it is for non-primary production income. So I will type 3606 at 13U in my tax return on MyGov. Then at 13C, I will add frank distributions of 22870. Then I will add 769 of franking credits at box 13Q. You will notice that these are not called dividends, as VAS is not a listed company. It is a listed trust, and a trust pays trust distributions, which are allowed to pass on the franking credit it receives on your behalf to you. So you still get the same tax benefits of dividends in Australia. However, they're not really dividends. They're now just trust distributions. If you own shares directly, then the dividend income and franking credits will be recorded in the dividends section of your tax return, not in this location. Next, we need to include capital gains tax in box 18A, which is the net capital gain the fund has made from selling assets it held on your behalf, which the trust must pass on to you to pay capital gains tax on at your relevant rate. This value is after the 50% CGT discount has been applied, which is correct for me as I am an Australian resident that owned the investment for more than 12 months. In box 18H, I am adding the gross capital gain on the tax statement before applying the CGT discount of 50%, which should be twice the value I added in box 18A. If I wasn't entitled to use the 50% CGT discount, then I would have to enter the gross capital gain value in 18H into box 18A too, and pay tax on the higher amount. This is a situation where the pre-fill would not be correct, as your investment manager would not know your personal circumstances. Another situation where you may need to override the capital gains tax shown on the pre-fill would be if you had capital tax losses from disposing other assets at a loss, either this year or from earlier years brought forward. You may end up having no net capital gains to show in box 18A and only box 18H, and that depends on your personal situation. Now, VAS has also paid foreign income of $463, which I need to include in box 20E. I need to also state the same amount in box 20M per the statement. As the fund paid overseas tax, there is also a foreign tax credit that I can claim back and reduce my tax of $15.64, which I'll include at box 20O, with decimal points included, which is usually required just for this field. You now just need to press the Save button and then Save and Continue button, and the tax return will be auto-populated with this income at the correct location in the tax return. If I had another ETF tax statement, I will just add a new entry in MyGov and repeat the same steps with the information on that tax statement, just as I've shown you now. If you're finding this video helpful, please do me a favor and hit the like button, as it will help my channel a lot. Please also leave a comment if you have any questions, and I'll get back to you as soon as possible. For most individual taxpayers, you need to focus on just Part A of your tax statement to complete your tax return. Part B provides the same information as Part A, but in more detail, and can be more useful for some certain situations. However, the main thing to look out for in Part B for most people is the cost-based adjustment numbers located here. You need to keep track of cost-based adjustments on each of your investments, as it will impact the capital gains tax you pay when you decide to sell your investment. I keep track of my portfolio and cost-based adjustments using an online tool called ShareSite, which is free if you have less than 10 holdings, and is great for keeping track of your taxes on investments, including distribution income and capital gains tax, and so much more. I've included a link in the description of this video for ShareSite if you'd like to check it out further, and if you use my link you can get the first 4 months free if you ever upgraded to a paid plan. For more information on capital returns and capital gains tax for beginners, you can watch one of the videos on your screen right now, where I explain why capital returns matters and how you can keep track of your investment portfolio and taxes automatically for free. See you in the next one.